So let's have a look about one way how to predict future revenues, taking in consideration revenue, previous revenue changes and the book value per share changes. So for example, what we are looking here is Apple, and I have highlighted 2004 December and 25th are those lines here, so they are a little bit skewed, but it's okay. So why I did highlight this line is that we want to, this is the date that was preceding this really nice constant revenue increase, like consecutive quarters for years and years and years and years. And now what I'm trying to look at is how to find these points, and for that I have came up with a few metrics, like the second graph on my screen is revenues increase percentage all time. So it's pretty much what it does is calculating how many quarters were positive of all of quarters so far. And so what we do see here is that first couple of years maybe we saw 100% increase, and then it a steady decline, and you can see it really you can easily see it matches up the downfall of the mid to late 90s till 2004 or something, when I guess the first iPod came out or something. Unfortunately it's a little bit zoomed out, but you can see that the metrics started to increase when Apple had the first like financials at all times. So this is the all time. It is very nice to see the long-term changes. Like we could really see the trend reversal, like from the negative to the positive, and third plot here we can see the so this is the same metric but 18 months. So like from here it's easier to spot the short-term changes, especially if you want to like spot the entry point what we are working here, like so this would be like 0.833. 2004 we saw it starting to climb from lows to creeping up higher and higher and higher, and so about 83% of the last 1.5 year quarters were positive for Apple. So fourth plot here is still revenues, they all revenues, but we can see the quarterly rate 1.5 years. And what is it good for is spotting the short-term trends, like good entry points for predicting the future revenues. This is 1.5 years, 18 months, and this is now all time. Actually, I just realized I made a mistake. This one is duplicated. It was supposed to be compounded annual growth rate, but I will fix it on the next video. So in order to do some statistical analysis and replicate and trying to find companies that match now is we should just copy some of the metrics, the numbers, and try to see what we find. So let's write down something. This quarterly rate 1.5 months was 14.54, and what else? Revenues increase percentage 18 months should be 0.833, and this is it for revenues. Now let's have a look for book value. Now we're looking at the book value. Let's remember the date was 2004 December 25th, which is here, and here, and we can even see a little bit more comprehensive picture that does confirm a really good entry point and confirm that we can use those metrics to predict the future revenues. So we can see it's started from 2004, 25th of December. Every single quarter was we saw book value increase. Also starting from here 2002 or so, like the dip, we saw constant all time book value per share ratio increase, even though it was never really bad ratio to begin it, because the bottom was only 0.8, which is quite high. And if you look now 1.5 months, then we saw that 2004 December there were already few quarters where the metric was at 0.11, meaning that every single quarter for 18 months was we saw an increase. And also we see the same trend line on the compounded quarterly rate. Let's write some of the metrics down now. So all-time book value score was 0.83. So this is obviously 100%. And quarterly growth rate 18 months 3.62. And next what we will do is use all of these metrics, including revenue, to filter out and see are those metrics statistically significant. So looking at taking the notes from the Apple revenue charts we just saw, I made a filter trying to copy the metrics or making a little bit adjustment to get more results, more companies to work with. So these are the metrics. Want to make sure that we're seeing all-time high revenues, all-time increase 92%. Last copying Apple last 1.5 months, off 1.5 years 83%. Quarterly growth rate more than 10, book value all-time high. We want to make sure 1.5 years every quarter we saw an increase of book value, all-time rate more than 90%, and quarterly growth rate of book value more than 10%, which is a lot, but there are tons of companies like that. And here is the proof of the usefulness of those metrics. This is just outstanding how few filters we needed and how much better the future revenues are comparing to old stock market data. We can see that first quarter already 7.3%, which is the same as stock market. So one quarter beats already the stock market average for 1 year, and in 5 years we can see just how enormous the difference is. The average has always been 38.4% expected revenue growth, but with the companies we chose, we can see 137.4% is the medium, but 25% quantile is well over 2x. And the worst, pretty much the worst case scenario, let's say 25% quantile is already higher than the medium of the average all-time companies.